One of the most historic days in cryptos is just weeks away, the Ethereum Merge. This is when Ethereum is going to be migrating from proof of work to proof of stake and has really kind of kicked off a bull run these last few weeks. In this kind of gloomy macroeconomics, we have one thing to look forward to, and that is going to be the merge. So if we take a look at the charts here, we can see back on June 18th, it looks like we hit a low of around 880, and it's been pretty much a straight line up since then. I mean, we are up around 90% from those lows just over the past 3 weeks. If you've been following me on Twitter, you know that I had price targets around ETH at about $1,000. Didn't quite quit the bottom, but that's okay. I started to accumulate ETH at $1,000. I didn't get my $15 SOL or $10 AVAX or the rest of these targets, so I haven't really accumulated these as much, but I think that's okay because when you look at Ethereum versus the other L1 contenders, Ethereum has actually outperformed, and I'll tell you a few reasons about that a bit later. And honestly, a lot of bears are just in disbelief right now because a lot of crypto is just sitting looking like this person, the macro Doomoor. And I put a little tweet out here that says, like, I don't control the narrative, I just submit to it. Because when you think about the markets typically bottom before the economy, right? So if people believe that the economy is starting to find a bottom and is going to be on the upswing, things like crypto, which are some of the most riskiest asset classes, are going to rocket ship up from here. Now, I'm not saying that this is the true bottom. I do believe that there is a potential future that we might hit a lower low before we go ahead and hit a new all-time high somewhere on this timeline. But I do believe that we found a local bottom, and over the next few weeks, I think things are looking pretty bullish. We got the numbers last week. Here is an article from the New York Times. We got our GDP data for the US economy, and we can see that it is negative about 2% for the second quarter of 2022. Now that we've had 2 consecutive quarters of negative GDP growth, a lot of people will tell you that the United States is in a recession, but that's not necessarily true because that's not actually the technical definition of what a recession is. See, if we come over here to the National Bureaus of Economics Research page, they actually are the ones who decide if we're in a recession, and they have a very unique definition for this. And it involves a significant decline in economic activity that has spread across the economy and lasts more than a few months. No mention of GDP multiple quarters, right? And in our interpretation of this definition, we define 3 criteria: depth, diffusion, and duration. And here again, we have this article from Deloitte, and that the US recessions do not require GDP to fall for 2 consecutive quarters, because you remember when we had COVID disrupt the entire US economy and market, that was technically a recession that only lasted a few months. And this is generally just a rule of thumb that was suggested in 1974, but Ember did not adopt it. If we take a look at the price action over the last week, the numbers came in on the 28th, and look at this massive bounce. And this massive bounce is because even though we've seen negative GDP growth, things aren't potentially as bad as we expect them to be. And what's more powerful is that we believe that things are finally finding kind of this bottom here. When you're investing in crypto, it's really important to understand trends and narratives. When we got that and bad inflation numbers and bad GDP numbers and the market didn't care and it bounced higher, that gave us a green light that the train is leaving the station. So either get on the train or get out of the way, but it is going. Enough about the macroeconomics. Now let's talk about what's driving this narrative, and that is going to be the merge. I've never been more excited about a day in crypto. This is literally going to be historic, watching Ethereum transition from proof of work to proof of stake. And really what this means is we're going to take today's mainnet that you and I and everyone interacts in, and we're going to merge it with something called the beacon chain. And if you're enjoying this video so far, please go ahead and hit that like button and consider subscribing. Drop a comment below if you're enjoying this type of video. It's a little bit different format than what I used to be doing, where I normally just focus specifically on DeFi strategies, but I think it's fun sometimes to take a step back and look at overall what's been happening in this market. Anyways though, let's get back into this. So right now, Ethereum mainnet is the current execution layer, right? It's where we send transactions and things like that. And that beacon chain that I talked about, that's actually the new consensus layer. So those, right, are coming together in this picture. Even though the Ethereum Merge isn't going to make gas any cheaper, one of the biggest things I'm excited for is going to be the reduction in energy consumption, right? Climate activists and people concerned about the environment, rightfully so, have been very concerned about blockchain technology. But looking at this and how it's depicted, current Ethereum proof of work, Tower of Pisa, now as we move into proof of stake, the energy consumption of just a screw. And so just last week, we saw one of Ethereum's shadow forks again get upgraded, and it was successful migrating it from proof of work to proof of stake. And this gave the green light to do the last and final test net, which is scheduled from about August 6th to August 10th. We can see here the 3 different public test nets. We have Growly going live in just a few weeks. Definitely keep an eye out for it, but people expect no problems, which means the official merge is probably looking like late September. Coming back to the chart, there's a couple different ways you can play the merge and gain exposure and play to the upside. And that's really going to come down to Ethereum DeFi and Layer 2s. If you are interacting on-chain at all and during Ethereum during the last bull run, you know that people were paying hundreds, if not thousands of dollars in gas, and screenshots like this were across Twitter left and right. And this is really what kind of fueled the narrative of alternative layer 1s like Solana, Luna, and AVAX. Obviously, Luna is no longer with us, but you get the point. And that's mainly because things like Ethereum Layer 2s weren't really ready. One of the best ways to play the Ethereum merge is, of course, just to buy Ethereum. But if you're looking for higher beta plays, this is the first project we're going to be looking at, which is going to be Lido Finance. If you're not familiar with Lido Finance, they allow you to actually stake your Ethereum, and in return, they give you something known as staked ETH. It's a liquid derivative, and one staked ETH is always worth 1 ETH, and you go ahead and collect the fees and the APYs as you normally would. And the reason why you have staked ETH is that you can then use it into the world of DeFi. Now, if you've never heard of Lido, they do have other projects and other staking available, everything from Solana, Kusama, Polygon, and Polkadot, right? So a lot of different options here, but of course, we're focusing on Ethereum. So if we take a look at this chart here of Beacon Chain depositors over time, we can see that Lido is the #1, has significantly more ETH, even more than the majors. We see other people up here like Coinbase, Kraken, and Binance. We take a look at Lido's price action. See, the Lido token itself is pretty much just a governance token. It doesn't have a ton of value accrual, but people do expect the future where you should be able to stake it and maybe earn some revenue here. But we can see it's had a monstrous run. If we take a look at the bottom and go ahead and show what today looks like, up 400%. So pretty wild, potentially still has a lot of room to grow, because remember, staked ETH does not necessarily just unlock a day 1 of the merge, right? It will not unlock for a good 6 to 12 months later. So Lido is definitely going to be sticking around. If you want to go ahead and take advantage of the Lido service by staking your ETH, again, you'll get that derivative staked ETH. You can use it on things like Aave. You can deposit as collateral, borrow against it, which really helps access that capital if you want to go on and do other things. There's also, if we come over here to something like the Curve pools, I think they have one for stake ETH and ETH. It's earning about 2.9% base, but then you get an additional 5.4% in Lido rewards on top of it. So that's pretty cool. Another way to play the Ethereum merge and the potential upside and catalyst is going to be through something like Uniswap Protocol. Uniswap Protocol has one of the deepest amounts of liquidity of all of crypto. They are across many chains, including all the popular L2s, right? And their token itself as well has been taking off like a rocket. Here we can take a look at Uniswap's price action. Again, Uniswap is also just a governance token. There's no value accrual. And when I talk about value accrual, I mean things like revenue sharing or staking and things like that. Although I know Uniswap is looking into a future where if we come look at the lows and we check things out now, up about 140% in the last weeks, right? So definitely gaining a lot of momentum. Come over here to Uniswap, we can see that these pools do incredible amounts of volume. Over the last 7 days, this single pool has done almost $5 billion, right? And it just goes a little bit down from there, 900 million, 700 million, 650 million, right? So if there ever gets a point where Uniswap takes some of these fees and reflects it back into stakers, right? I think this is what people are betting on for a future. Uniswap definitely has a bright future in my opinion. I think they're perfectly positioned if we ever see something like crypto regulation to go ahead and fend that off and go ahead and thrive in that ecosystem. Remember, of course, you can always come here, you can provide liquidity, you can earn swap fees and things like that. And so that's always super cool. As you know, I'm huge on farming. Most of my crypto is in different protocols and dexes to earn those swap fees. The next way to play something like the merge, it can be Ethereum Layer 2s, right? So I mentioned last bull run, a lot of Layer 2s weren't really ready. All we really had was something like Polygon. I think Polygon has great product market fit for certain use cases, but I'm much more bullish on things like Optimism and Arbitron because they are optimistic rollups. Something like Polygon is this completely separate blockchain. It's a side chain. It's centralized. I'm not a huge fan, but it does have potential and I can't ignore that. But when we look at these three, Arbitron does not actually have a token, so there's not a ton of value accrual that can happen specifically to the Arbitron ecosystem, but both Polygon and Optimism do have tokens. If we look at Optimism, it is a governance token for the ecosystem. The ecosystem actually uses Ethereum as gas, which makes sense because it is an Ethereum layer 2. So what they did is they did a big airdrop. So we had a massive fall. Of course, everyone's probably just selling off their free money. Really can't blame anyone, to be honest. And now we've been seeing these giga candles, and Optimism really has taken a foothold of an Ethereum 2, gaining a lot of traction, and things are pretty much just exploding over there in that ecosystem. You can see here that the Optimism ecosystem is growing, 600 million in total value locked, up 10%. We scroll down, we can see some of these biggest projects are Velodrome. We can also see, really what's interesting, a lot of Phantom teams are migrating over here. We notice we can see things like Taro and Beethoven, and I think if we scroll down here as well, yep, there it is, Reaper Farm, which was a native auto compounder over on Phantom, which is now available on Optimism. And you have to remember, the big catalyst for L1 narratives was the demand for block space on Ethereum because gas fees were just so insane. It was so slow and sluggish, but these layer 2s are really positioned now to capture the next bull run. We can see here Optimism, over $1 billion in gas fees saved. I'm sure a lot of people are very happy. You can of course speculate on the Optimism ecosystem by buying the coin OP, or if you want something like a higher beta play, you can check out something like a Velodrome again, which is a solid fork from Andre, brought over from Phantom, and they said they fixed all the bugs, and so I think things are looking pretty bullish. This one is a bit more of a higher risk play. Velodrome does right now have more liquidity than something like Uniswap, which makes it really interesting for the Optimism ecosystem because a lot of time a native DEX can win because they're able to offer higher rewards. If we take again a look at Velodrome's price action, it crashed in the initial, had a nice little accumulation, and really has been rocketing off. I went ahead and just started a small Optimism and Velodrome position play just about yesterday, so I'm down just a little bit in it, but I'm looking at a potential next few weeks where I think I'll get some more potential upside. So we'll see. Not incredibly high conviction as some of my other plays, but I think the risk reward's in my favor, so I'm going to take the bet. We've been talking about layer 2s, right? We talked a little bit about Optimism. Of course, you can also play Polygon, which is the leading layer 2 scaling solution to date in terms of at least total value locked. So you can stake it with projects like Lido or Stater Labs. You can also then come here and do LP pairing with things like Bouncer and earn something like 21% APY. Polygon, of course, has been soaring on the news that they've been selected for Disney's Accelerator program, which is going to potentially mean a lot of integrations and partnerships with Disney, which obviously would bring a lot of value to the ecosystem. In my opinion, this is even more exciting news. We can see here that Polygon takes a major lead in ZK rollups with a groundbreaking deal and a $400 million deal. So there's many different ways, like we talked about, to scale Ethereum. There's sidechain, which is what Polygon is. There's optimistic rolls, but there's also one more, which is going to be ZK rollups. A lot of people feel quite confident that ZK ropes are a superior scaling solution to optimistic ropes, but the problem has been making an EVM compatible ZK rope, which Polygon claims that they were going to be able to do. I believe that they're launching this roughly in 100 days, so definitely be on the lookout on it. But if they're able to make this and gain even more TVL, right, that's going to be a lot of upside for the Polygon ecosystem and the Matic token. Something very interesting though is on this new layer 2 scaling solution, they're going to use Ethereum as the gas token rather than the Matic token. The Matic token will still be used for things like staking and securing the network, but very interesting move by the Polygon team to use ETH as gas. Honestly, it's probably the best decision though. That pretty much wraps everything up. We talked about so many different things, the macroeconomic landscape, things that are driving this Ethereum-led bull run, different ways we can play this, whether it be Ethereum DeFi or other layer 2s and opportunities within these ecosystems. And if you're looking for a community of like-minded people that love talking about crypto, Web3, and everything NFTs, come over to the Discord. It's free. There's nothing to buy. We'd love to hang out with you there. Anyways, see you in the next one. Cheers and happy farming.